Hello, my name is Nicholas Pfaff. I'm a Managing Director and Head of Sustainable Finance at ICMA. I'm also the Secretary of the Green Bond Principles. I'm very pleased to be here today with Denise Odaro, who's the Head of Investor Relations at IFC, but she's best known to us for her work as Chair of the Green and Social Bonds Principles Executive Committee, which we refer to as the EXCOM. Denise, welcome.
Thank you very much, Nicholas, for having me.
Denise, to start our conversation, I wanted to ask you to describe the work that you do with the Executive Committee, with the market initiative behind the Green and Social Bond Principles, which I think involves now more than 400 members and observers.
From the inception of the concept of the Green Bond Principles back in 2014, the 4 banks that served as the drafting committee for these principles recognized that diverse stakeholder input was required for the principles to be adopted far and wide. And so now we have issuers such as IFC, as you mentioned. Of course, we have investors as well. And we've come a very long way in the last 7 years in terms of growth of the Green Bond Principles ecosystem. And we now have 3 frameworks related to use of proceeds thematic bonds. And those are, of course, the Green Bond Principles, also known as the GBP, the Social Bond Principles, and of course, the Sustainability Bond Guidelines. But in addition to that, we've also released one framework that expands sustainability from strict use of proceeds to corporate strategy, and that is the Sustainability Linked Bond Principles that was released last summer. I think our challenge, Nicholas, is engineering an acronym to convey, in fact, the family of frameworks that we have, mitigating this alphabet soup that we found ourselves in. But every year following the annual general meeting of the principles, we do reach out to the over 400 members and observers community, as you said, in terms of getting a feel for what is the market looking like and what are the areas that we ought to focus on for time to come. And I will say that our goal continues to be this, our North Star being what in fact can we do to further promote the sustainable bond market.
That's very interesting, Denise, and I think it's important because we sometimes get the feedback that part of the market thinks that ICMA goes into a dark room and comes up with these principles, and as you were saying, it's really part of a very wide market initiative. You also mentioned that we've got this whole family, a kind of collection of principles out there. Now, what role do you think that these principles actually play in support of the sustainable bond market?
I'd say that the principles have been extremely beneficial in that market practitioners, draft and govern those principles before they go out the door. So the content in itself passes the feasibility test of issuers, investors, underwriters, and the related bodies that make up the member and observer community. The principles, in fact, I would say are all steps in this journey that we have to make, which is the journey to, of course, a low carbon economy. And we are all aware of what those challenges and risks are. I mean, the physical and financial risks that climate change brings, the degradation of assets that we're seeing, and of course, the rising cost and lack of ability to insure some of these losses. So the sustainable bond universe evolved out of that necessity to adapt our current models to the future path of continued development, but sustainably. And we do this in several ways, as we said. We've designed the principles to provide guidance on 3 levels. One being, the key components required to launch a sustainable bond. Second being to aid investors in ensuring the availability of information that they have to evaluate the environmental and social impact of their bond investments. And thirdly, to assist underwriters by moving the market towards the standard disclosures that facilitate transactions. This year alone, only in May, we've seen 80 billion of issuance of sustainable bonds, which is more than double the volumes in May of last year. Last May was $32 billion. And the growth in sustainable bond issuance has been spectacular this year. I think it's fair to say that since 2014, the volumes of issuance we have seen and the acceptance and growing demand from issuers may not have occurred were it not for the outlines the principles have provided.
we also did the as you know, Denise, we did this evaluation of the take up in the market of the principles, and we found that 97% of sustainable bonds issued internationally actually reference the principles. So there really is global support for this standard. Now, we've mentioned the work of the executive committee. We've talked about this wide market initiative, which supports it. Let's come back to ICMA. I mean, how do you see ICMA's role, and how important has it been in working with this market initiative?
So ICMA has played a vital role in the growth of the sustainable bonds through the excellent hosting of the principles through yourself and your colleagues. As the secretariat to the principles, you've also been at the forefront of the financial industry's contribution to the development of sustainable finance more broadly, given, of course, we've seen this uptake in the loans world, et cetera. I'd say that it appears to me, in fact, that I would say that ICMA is committed to promoting best practices and disseminating this market information for sustainable finance through the work you do on the principles, but also through active contribution to policy and regulatory dialogue, which you do, of course, you've done this on the G20, the European Commission's TEG, just to name a few. So a huge, very important and vital role.
Denise, thank you very much. Coming back to the, and I can confirm how committed we are, by the way. Coming back to the sustainable bond market, you've mentioned the growth, we've mentioned the expansion of the principles. Where are we all going with this? I mean, what's the future of the sustainable bond market?
So we've done a lot, as you said, and it's quite impressive to see the growth of the market, but we are still only over $1 trillion in issuance, which is barely 1% or so of the global bond market. So there is a lot of room for growth. To achieve the global goals of net zero by 2050, we need to beckon at high emitting sectors to partake in this market. And they can only do that through transitioning, of course, their models, which is what we want. We did release the Climate Transition Finance Handbook in December of 2020, which offers a bridge for these hard to abate sectors to credibly access sustainable bonds. I think that the growth that we will see is exploring this alongside, of course, the social elements which bring about the discussions of a just transition. We've essentially, at least I would say that in terms of medium-term goals to 2030 to achieve the sustainability development goals. And so this is where our focus is in going forward with the ExCom, the new executive committee that comes into office in the next few weeks, is looking at what more can we do beyond what's already done to promote issuance, maintaining, of course, transparency and integrity of the products.
Denise, you mentioned the Climate Transition Finance Handbook. How is that different from the principles? I mean, why don't we have climate transition principles?
I think it's fair to say that in the numerous discussions that we've had externally with a member of the observer community and internally, is that the proliferation of labels does not do justice to any of the market-related parties here. There is a continued need for education at every point, explanation of the credit risk if there is one or not, and what we're trying to do is consolidate. Fragmentation certainly doesn't build to growth in this arena, of course. Hence, our belief is that for a company that is in a hard to abate sector to access a sustainable bond, there already is mechanisms there for them to be able to do so through the green bonds. However, of course, the level of disclosure that is required for such an issuer is much higher. Hence, the Climate Transition Finance Handbook offers that means to enable them to take the steps needed to arrive at the overall objective that we all have, albeit that they are in a higher demanding area in terms of disclosure and transparency required.
Right. So the Climate Transition Finance Handbook is about disclosure and a transition theme, while the principles is more about bond guidance, bond labels, so green bonds, sustainability linked?
Indeed. So the established products we have are the green bonds, the social bonds and sustainability bonds, which are a combination of green and social use of proceeds. And then, as I'd mentioned earlier, we of course have a sustainability linked bonds as well, which include the corporate commitment to a sustainability goal to the coupon of a bond. Climate transition can actually feed into both of these types of products, both use of proceeds or the sustainability linked. And again, it just provides a higher level of disclosure for such issuers in hard to abate sectors to access use of proceeds or sustainability link to achieve the Paris goals.
Denise, thank you. Thank you very much. And I would also like to thank our viewers at the annual conference of ICMA.